Sometimes the most dangerous person in the room is the one everyone assumes doesn't belong there. Taryn Williams had 2 degrees and spoke 3 languages, but her manager still asked her to just focus on being friendly while serving coffee. What happened next would make every investor in Chicago rethink who they dismiss at first glance. The morning rush at Grind Coffee on LaSalle Street hit like a freight train at 7:15 a.m. sharp. Taryn Williams pulled her apron strings tighter and watched the glass doors swing open to release another wave of suits, clutching phones and muttering about market volatility. She pressed the steam wand against the metal pitcher, and the familiar hiss drowned out the chatter of traders and bankers who treated her like furniture that happened to make lattes. A man in a Hermes tie stepped up to her register, scrolling through his Bloomberg app without looking up. "Large coffee, black, and make it fast," he said, then glanced at her name tag. "Taryn, that's interesting." His eyes lingered on her dark skin for a beat too long. She punched in his order and quoted the price, her voice steady despite the familiar sting of being cataloged as interesting by yet another white customer who thought he was being progressive. "Here you go, sir." She handed him the cup, but he didn't take it immediately. Instead, he leaned against the counter and studied her with the practiced assessment of someone used to evaluating assets. "You know what, Taryn? You'd be a lot prettier if you smiled more. This serious thing you've got going on." He gestured vaguely at her face. "It's not very welcoming for customer service." The coffee shop didn't exactly fall silent, but Taryn felt the shift. The woman behind him in line suddenly found her phone fascinating. The barista working the espresso machine kept his eyes down. Even Janet, her manager, gave a knowing nod from behind the pastry case, as if the customer had just delivered some profound wisdom about hospitality. Taryn's fingers tightened around the register's edge until her knuckles went light. "I'll keep that in mind," she said, her voice carrying just enough edge that the man finally took his coffee and moved toward the door. But he paused at the threshold and called back, "Investment advice, sweetheart. A smile's worth more than you think in this business." The door chimed as he left, and Taryn stared at the spot where he'd stood, her reflection caught in the glass, looking back at her with the same unsmiling expression that had apparently cost her points in his customer service evaluation. She'd been carrying around her master's thesis on behavioral economics for 2 months now, the bound copy sitting in her bag like a talisman. During her break, she pulled it out and flipped to the section on market psychology, running her finger along the margins where she'd scribbled notes about investor bias and pattern recognition. The research had earned her a 3.8 GPA at Northwestern, but here it just made her backpack heavier. 20 minutes later, the man with the Hermes tie returned with another suit, older, grayer, carrying a leather portfolio that probably cost more than Taryn's monthly rent. They claimed the corner table, and she couldn't help but overhear their conversation as she wiped down nearby surfaces. "The Henderson FinTech deal," the older man was saying. "Their Series B looks clean on paper, but I'm worried about the equity structure." Taryn's hand stilled on the table she was cleaning. She knew that deal. She'd read about Henderson Tech in 3 different financial blogs, and their capital structure was a masterclass in founder dilution disguised as growth strategy. The older investor was right to be worried, but he was worried about the wrong things. "Look, Marcus," Hermes tie said, leaning back in his chair, "Henderson's got solid fundamentals, revenue growth, user acquisition, the whole package. Sometimes you overthink these things." He tapped his phone against the table with the confidence of someone who'd never been wrong about anything important. "The equity split gives us 15% for $12 million. That's fair market value." Marcus frowned. "But if they're planning another round in 18 months? "They're not. Trust me on this one." Taryn set down her cleaning cloth and approached their table, her heart hammering against her ribs. "Excuse me," she said, her voice barely steady. "I'm sorry to interrupt, but I couldn't help overhearing. You're talking about Henderson Tech." Both men looked up at her with the particular brand of surprise reserved for service workers who dared to have opinions about their conversations. Hermes tie's expression shifted from confusion to mild irritation. "Can we help you with something?" "Actually, I think maybe I can help you." Taryn's mouth felt dry, but she pressed on. "That 15% equity position? Henderson's planning a down round in 6 months, not 18. They've already had preliminary talks with Sequoia about bridge financing that'll dilute your position to maybe 3%, 4% if you're lucky." The silence stretched long enough for the espresso machine to cycle through an entire grinding sequence. Marcus stared at her with the intensity of someone trying to solve a puzzle, while Hermes T's face went through several expressions before settling on patronizing amusement. "That's quite a theory," Hermes T said. "But I think we've got this covered, sweetie. Thanks, though." He turned back to Marcus, clearly expecting Taryn to retreat to her register where she belonged. Instead, she reached into her apron pocket and pulled out a napkin. "Mind if I show you something?" Without waiting for permission, she uncapped a pen and started sketching out Henderson's capital structure on the thin paper. See, their current burn rate is $800K monthly, but their runway analysis assumes they'll hit profitability by Q3 next year. Problem is, their customer acquisition cost has been climbing since January, and their retention metrics are trending down. She drew arrows connecting revenue projections to cash flow timelines. They'll need another round by summer, and when they do... Marcus leaned forward, studying her impromptu financial model. "How do you know all this?" Taryn felt heat rise in her cheeks. "I read a lot of trade publications. And Henderson's CFO gave an interview to TechCrunch last month where she mentioned exploring alternative financing structures for Q2. In my experience, that's code for, we're about to get desperate." "Your experience?" Hermes Tai's voice dripped skepticism. "I have an MBA from Northwestern," Taryn said quietly. "Concentrated in corporate finance." The second silence was different from the first. Marcus picked up the napkin and studied her calculations, his expression shifting from polite interest to genuine concern. "These numbers, if you're right about the burn rate acceleration..." "She's not right," Hermes T said, but his voice had lost some of its certainty. "Henderson's management team has been completely transparent about their financial position." Taryn almost smiled at that. "With respect, sir, no startup management team has ever been completely transparent about their financial position. It's not in their DNA." She pointed to a specific calculation on the napkin. "But you don't have to take my word for it. Call Henderson's head of business development. Ask him about their enterprise client pipeline. If I'm wrong, their Q4 revenue should be rock solid. If I'm right, they've got about 4 committed contracts and a bunch of maybes that are looking increasingly unlikely." Marcus was already reaching for his phone. What's the BD head's name?" "Chris Nakamura. He's on LinkedIn. Used to work at Salesforce." As Marcus started typing, Hermes Tai stood up abruptly, knocking his chair back slightly. "This is ridiculous. We're taking investment advice from a barista now?" He looked directly at Taryn. "No offense, but maybe stick to what you know, okay? Coffee, smiling, customer service. Leave the finance to the professionals." The words hit like a slap, but Taryn kept her expression neutral. "None taken," she said, though her voice came out tighter than she'd intended. "I hope the deal works out for you." She turned and walked back to the counter, her hands shaking slightly as she straightened a display of coffee beans that didn't need straightening. Behind her, she could hear Marcus asking his contact about Henderson's pipeline, his voice growing more concerned with each question. Janet appeared at her elbow, arms crossed. "What was that about?" Janet asked, her tone suggesting Taryn had somehow overstepped by engaging with customers about anything more complex than sugar preferences. "Just trying to be helpful." "Well, don't. Our job is coffee, not whatever that was." Janet gestured toward the corner table where Marcus was still on his phone, scribbling notes on Taryn's napkin. "Some customer complaints about staff giving unsolicited business advice, and corporate will want to know why." Taryn nodded and returned to her register, serving the next customer with the practiced smile that everyone seemed to think was her most valuable professional skill. But she kept glancing at the corner table, where Marcus's phone conversation was clearly not going according to plan. By the time he hung up, his face had gone pale. "Everything okay?" Hermes Tai asked, though his casual tone suggested he already knew the answer. Marcus held up Taryn's napkin. "Henderson's enterprise pipeline is mostly vapor. 3 confirmed contracts for Q4. Total value may be $400K. Nakamura says they're optimistic about closing additional deals, but..." He trailed off, staring at Taryn's calculations. How did she know? 3 days later, Taryn was restocking the pastry case when she noticed Marcus sitting alone at the same corner table, reading something on his tablet. He looked up when she approached. "Excuse me," he said. "You're Taryn, right? The one who warned us about Henderson?" She nodded, suddenly conscious of her coffee-stained apron, and the way her hair had escaped its ponytail during the morning rush. How did that work out? We pulled out of the deal yesterday. Henderson's burn rate was actually worse than you predicted. They're looking at insolvency by March if they don't raise capital immediately. Marcus closed his tablet and studied her with the same intensity he'd shown her napkin calculations. Can I ask you something? What are you doing working here? The question caught her off guard. I need the job. Student loans, rent, the usual. But you've got an MBA from Northwestern. You clearly understand venture capital better than most of the analysts I work with. Why aren't you working in finance? Taryn felt the familiar weight of explaining herself to someone who couldn't imagine facing the particular combination of barriers that had led her to this moment. I've been trying. It's a competitive field. She paused, then decided on honesty. And I think sometimes people look at me and see someone who should be serving coffee, not analyzing investment opportunities. Marcus was quiet for a long moment. Yeah, what if I told you that wasn't true everywhere? That afternoon, Janet called Taryn into the back office for what she described as a performance conversation. The tiny room smelled like industrial detergent and disappointment, and Janet's desk was covered with employee handbooks and incident reports that made Taryn's stomach clench. Look, I like you, Janet began, which Taryn had learned was never a good way to start these conversations. But customers are here for coffee and a pleasant experience. They're not looking for financial advice from the staff. She pulled out a printed email and placed it on the desk between them. This is from corporate. They got a complaint about inappropriate employee behavior from a customer who felt lectured by staff about business matters. Taryn didn't need to ask which customer. I was just trying to help prevent them from making a bad investment. That's not your job. Your job is to make drinks, take orders, and create a welcoming environment. Speaking of which, Janet leaned forward with the expression of someone about to deliver what she considered constructive feedback. Several customers have mentioned that you could be more approachable, smile more, engage in small talk, that sort of thing. I know it might not come naturally, but customer service is really about making people feel good about their experience here. The irony wasn't lost on Taryn that she was being lectured about customer service after potentially saving someone $12 million, but she nodded and mumbled something about taking the feedback seriously. Janet seemed satisfied with her contrition and launched into a speech about teamwork and brand representation that Taryn stopped listening to after the first few sentences. Walking home to her studio apartment in Logan Square, Taryn thought about her father, who'd worked construction for 30 years and always told her that being right wasn't enough if you were right in the wrong place. He died her sophomore year of college, before seeing her graduate, before watching her struggle to find her place in industries that seemed designed to exclude people like her. She wondered what he'd think about her current situation, overeducated and underemployed, serving coffee to people who made more in a day than she made in a month. Her phone buzzed with a text from an unknown number. This is Marcus Chen from yesterday. I'd like to talk to you about a job opportunity. Are you free for coffee tomorrow? Somewhere other than where you work. Taryn stared at the message for a full minute before responding. The next morning, she met Marcus at a cafe in River North, 20 blocks and a world away from the grind. He was already there when she arrived, reading the Wall Street Journal and drinking what looked like his second cup of coffee. Thanks for meeting me, he said as she sat down. I'll get straight to the point. I'm a partner at Meridian Capital. We're a mid-market VC fund, about $200 million under management. We're looking for an analyst who can think differently about deals, someone who can spot problems that others miss. He paused. Someone like you. Taryn felt something flutter in her chest that might have been hope. What would that involve? Due diligence, market analysis, portfolio company oversight. Starting salary would be $95,000, plus bonuses tied to fund performance. Full benefits, equity participation? Marcus leaned forward. The catch is, you'd be working with a lot of people who look and think like my former business partner, the one who told you to stick to coffee. Can I ask why you're offering this to me? You barely know me. Marcus smiled. 3 reasons. First, you saved us from a terrible investment, which means you've already earned your first year's salary. Second, you did it without being asked, without knowing who we were, without any expectation of reward. That tells me something about your character. He paused. Third, you saw through Henderson's numbers in about 5 minutes. Most of our analysts would have missed that pattern entirely. Taryn thought about her student loans, her studio apartment, the condescending smiles she endured every morning at the grind. When would you want me to start? Monday, if you're interested. She was interested. Walking back to the grind to give her notice, Taryn felt like she was moving through someone else's life. Janet took the news with the resigned disappointment of a manager who just lost a reliable employee during busy season. But she didn't seem surprised. "I hope it works out for you," she said, though her tone suggested she expected Taryn to be back in a few weeks, humbled by her brief encounter with the real world. Taryn's first day at Meridian Capital involved a lot of paperwork, IT setup, and meetings with people whose names she immediately forgot. But by the end of the week, she was sitting in on deal reviews, analyzing financial statements, and building models that actually mattered to people who made decisions worth millions of dollars. The work was challenging in ways that made her Northwestern education feel relevant again. She spent her days dissecting startup business models, evaluating management teams, and building complex financial projections that guided investment decisions. Her colleagues treated her with the cautious respect accorded to someone who'd been personally recommended by a senior partner, though she could sense some skepticism about her unconventional background. 2 weeks into the job, Meridian's managing partner called her into his office for what he described as a check-in meeting. David Kim was Korean-American, maybe 50, with the kind of understated confidence that comes from 20 years of successful investments. His office overlooked the Chicago River, and Taryn found herself momentarily distracted by the view of tour boats navigating between the downtown bridges. "How are you settling in?" David asked, settling back in his chair. "Good, I think. The learning curve is steep, but the work is fascinating. Marcus tells me you have strong instincts for identifying potential problems in deals. That's a valuable skill." David paused, studying her with the same intensity Marcus had shown at the coffee shop. "Can I ask you something personal? What made you take a job serving coffee with your educational background?" It was a fair question, though Taryn had hoped to avoid this conversation for at least a few more weeks. "The job market was tough when I graduated. I needed income while I kept looking for something in my field." She decided against mentioning the dozens of rejection letters, the interviews that had started promisingly before ending with vague explanations about cultural fit and team dynamics. David nodded thoughtfully. "The finance industry can be insular. Sometimes we miss talent because we're not looking in the right places." He leaned forward. "I want you to know that we hired you because Marcus believes you can do this job better than most people with traditional backgrounds. But you'll need to prove that to everyone else." "I understand. I hope you do. Some of our investors, some of our portfolio company executives, they're going to make assumptions about you based on where you came from, how you look, how you sound. That's not fair, but it's reality." David's expression was sympathetic, but firm. "The question is whether you can handle that while still doing excellent work." Taryn thought about her mess tie, about Janet's performance conversations, about the 1,000 small moments when she'd been dismissed before she'd even spoken. "I've had practice." 3 months later, Taryn was leading the due diligence on a Series A investment in a logistics startup called Fleetwright. The company's management team had impressive credentials, Harvard MBAs, former McKinsey consultants, the kind of pedigree that usually impressed Meridian's investment committee. But something about their financial projections bothered her, a subtle inconsistency in their unit economics that reminded her of Henderson Tech. She spent a weekend digging into Fleetwright's customer data, building sensitivity analyses around their key assumptions, cross-referencing their claimed market penetration with publicly available industry reports. By Monday morning, she had 17 pages of analysis that painted a troubling picture of a company that looked successful on paper, but was built on fundamentally flawed assumptions about customer behavior. The investment committee meeting was held in Meridian's main conference room, with floor-to-ceiling windows that made everything feel exposed and consequential. David Kim sat at the head of the table, flanked by the other partners and senior associates. Fleetwright's CEO, a confident 30-something named Brad Morrison, had joined by video call from their San Francisco office. "Taryn's going to walk us through her analysis," David said, nodding toward her. She stood and moved to the whiteboard, trying to project more confidence than she felt. Fleetwright's model assumes they can achieve 40% market penetration in mid-tier logistics companies within 18 months, she began, sketching out the company's projections. But when you look at historical adoption rates for similar technologies, even the most successful platforms rarely exceed 15% penetration in their first 2 years. She turned to face the room. More importantly, their customer acquisition cost calculations assume a conversion rate that's about 3 times higher than industry average. Brad Morrison's voice came through the conference room speakers with a slight edge of irritation. I think there might be some misunderstanding about our market positioning. We're not just another logistics platform. We're fundamentally changing how companies think about fleet management. Taryn nodded politely. I understand the value proposition, but your burn rate projections show you'll need 200 new enterprise customers per quarter to hit your revenue targets. Based on your current sales team size and average deal closure time, that would require each sales rep to close deals at a rate that's, she paused to check her notes, about 4 times faster than the industry benchmark. The room was quiet for a moment. Marcus, who'd been reviewing Taryn's analysis during her presentation, looked up from his tablet. Brad, can you walk us through your Q2 customer acquisition numbers? Actual versus projected? There was a long pause before Brad responded. We're slightly behind our Q2 projections, but we're confident about Q3. How far behind? David asked. Another pause. About 30%. But that's primarily due to longer sales cycles than we initially anticipated. Taryn felt a familiar sensation, the same certainty she'd experienced with Henderson Tech, the recognition of a pattern that everyone else seemed to be missing. Brad, what's your average time from initial contact to signed contract? Currently about 4 months, but we expect that to compress as our sales team gains experience. And your projections assume 8 weeks. The silence in the room was thick enough to cut. David Kim was staring at the whiteboard where Taryn had mapped out Fleetright's revenue assumptions, his expression unreadable. Marcus was typing rapidly on his tablet, presumably running his own calculations based on the new information. Finally, David spoke. Brad, I think we need to schedule a follow-up call to discuss these metrics in more detail. We'll get back to you by end of week. After Brad disconnected, the room stayed quiet for several long moments. David finally turned to Taryn. How confident are you in this analysis? Very confident about the market data and industry benchmarks. The customer acquisition assumptions are problematic even if everything else goes perfectly. Taryn returned to her seat, suddenly aware that 6 senior investors were staring at her with varying degrees of interest and skepticism. But I could be wrong about their ability to execute faster than historical precedent. One of the senior partners, a woman named Sarah Chen, who'd been quiet throughout the presentation, leaned forward. What would you recommend? Taryn took a breath. Pass on this round. If they can prove their acquisition model works over the next 6 months, they might be worth revisiting at Series B. But right now, they're asking us to bet $12 million on assumptions that don't match market reality. David nodded slowly. Thank you. That was thorough work. 2 days later, Meridian declined to invest in Fleetright. 3 months after that, Fleetright laid off 40% of their staff and began seeking emergency bridge financing to avoid insolvency. Taryn's analysis had saved the fund from another potentially catastrophic investment. The recognition came gradually. Her name started appearing on more deal analyses. Partners began asking for her opinion during investment committee meetings. Other analysts sought her advice on due diligence approaches. But with the recognition came scrutiny of a different kind. Some of our limited partners have been asking about you, David mentioned during one of their monthly check-ins. They've heard about Henderson and Fleetright. They're curious about our new analyst who seems to have a talent for spotting troubled deals. Is that a problem? Not necessarily, but some of them are old school. They're used to a certain kind of person in these roles. David's diplomatic phrasing didn't hide the underlying message. Just be prepared for some awkward conversations at our next LP meeting. The limited partner meeting was held at the Union League Club, in a wood-paneled room that smelled like leather and old money. Taryn wore her most conservative suit and tried to project the kind of quiet competence that wouldn't threaten anyone's assumptions about what a venture capital analyst should look like. She was introduced to a succession of wealthy men who managed pension funds, endowments, and family offices. Most were polite but distant, treating her with the careful courtesy reserved for people they weren't quite sure how to categorize. But one LP, a silver-haired man named Robert Ashford who managed investments for a Chicago-based foundation, seemed genuinely interested in her background. "Marcus tells me you identified the problems with Henderson Tech while working at a coffee shop," Ashford said during the cocktail reception. "That's quite a story." "I got lucky, the right information at the right time," Ashford smiled. "Luck is what happens when preparation meets opportunity. But I'm curious, what made you think you could offer investment advice to strangers in a coffee shop? That takes considerable confidence." Taryn considered her answer carefully. "I saw them about to make a mistake that was going to cost them money. I couldn't just watch that happen. Even though they were strangers, even though it wasn't your job, especially because of that. If I'd been wrong, the worst thing that would have happened is they'd ignore me. If I was right and said nothing," she shrugged. "That seemed worse." Ashford nodded thoughtfully. "Moral courage. That's rarer in this business than analytical skill." 6 months later, Taryn was promoted to senior analyst with a salary bump to $135,000 and a larger equity stake in the fund. The promotion came with increased responsibility for managing portfolio companies and leading due diligence on larger deals. It also came with her own office, small, but with a window that looked out over the Chicago River. The irony wasn't lost on her that she now spent her days in meetings with startup CEOs who treated her with the automatic respect accorded to someone who controlled access to capital. The same kinds of people who dismissed her when she was serving coffee now hung on her every word when she asked questions about their business models and growth strategies. But the most satisfying moment came on a Tuesday morning when she was reviewing portfolio company reports in her office. Her assistant knocked on the door to announce that someone wanted to see her, a potential entrepreneur seeking advice about approaching VCs for Series A funding. The man who walked into her office was older, grayer than she remembered, but she recognized him immediately. It was Hermes Tai from the coffee shop, though he clearly didn't recognize her. He introduced himself as James Crawford, CEO of a fintech startup called Paycor, and launched into a polished pitch about revolutionizing small business payments. Taryn listened patiently as Crawford explained his company's traction, their competitive advantages, their plans for scaling. His presentation was smooth and professional, delivered with the confidence of someone accustomed to being taken seriously by investors. When he finished, she asked a few standard questions about customer acquisition costs and unit economics. "Those are great questions," Crawford said, leaning forward with the intensity of someone trying to make a connection. "You really understand the space. I have to say, it's refreshing to meet an investor who gets the nuances of our business model." Taryn smiled politely. "Can I ask you something, James? When you're evaluating potential hires for your team, what qualities do you look for?" The question seemed to catch him off guard, but he recovered quickly. "Smart people, obviously. Cultural fit is important. Team players who can execute under pressure." He paused. "Why do you ask?" "I'm curious about how you assess potential in people. Whether you think someone's background or appearance might influence your judgment about their capabilities." Crawford's expression shifted slightly, as if he sensed a trap but couldn't identify it. "I like to think I'm pretty objective about talent. Merit-based decisions, you know." "That's good to hear." Taryn opened Crawford's business plan and flipped to the financial projections. "Because I have some concerns about your revenue model that I'd like to discuss." For the next 20 minutes, she systematically dismantled Paycor's financial assumptions with the same precision she'd applied to Henderson Tech and Fleetwright. Crawford's confident demeanor gradually deflated as she identified flaw after flaw in his growth projections, customer acquisition strategy, and competitive analysis. "I think you need to spend more time validating your market assumptions before approaching Series A investors," she concluded. "Your product might be excellent, but your business model needs work." Crawford gathered his materials with the stunned expression of someone who'd expected a friendly conversation and received a masterclass in due diligence instead. "I appreciate the feedback," he said, though his tone suggested otherwise. "Maybe we can reconnect once we've addressed some of these concerns." "Of course. Feel free to reach out when you've got more data to support your projections." Taryn stood and extended her hand. "And James? Next time you're in a coffee shop, you might want to pay more attention to the person serving you. You never know what you might learn." Crawford shook her hand with a puzzled expression, clearly not understanding the reference. After he left, Taryn sat back in her chair and allowed herself a moment of satisfaction. The encounter felt like completing a circle that had started 18 months earlier in a coffee shop on LaSalle Street. But the real transformation was visible in smaller moments. The barista at the cafe near Meridian's office, a young black woman named Keisha, who was finishing her accounting degree at DePaul, had started asking Taryn questions about careers in finance. Taryn found herself staying after her morning coffee order to talk about networking strategies, resume building, and the kinds of skills that mattered in investment analysis. "I never thought about venture capital," Keisha mentioned one morning while making Taryn's usual order. "I assumed you needed connections, like family money or something." "You need analytical skills and good judgment," Taryn replied. "The rest you can learn." Keisha handed over the coffee, a perfect cappuccino with foam art that put the grind's efforts to shame. "Maybe I should start reading those finance blogs you mentioned. Start with TechCrunch and PitchBook. And if you ever want to grab coffee and talk about career stuff, let me know." Taryn paused at the door. "Outside of work hours, obviously." The ripple effect extended beyond individual conversations. Word had spread through Chicago's venture capital community about the analyst who'd identified several problematic deals and saved investors millions in potential losses. Taryn started receiving invitations to industry panels, networking events, and conferences where she was often the only black woman in rooms full of investors and entrepreneurs. At first, she felt like a curiosity, the unlikely success story that people could point to as evidence of the industry's openness to diverse talent. But gradually, she realized that her presence was changing conversations in subtle but important ways. Other investors began asking harder questions about management teams' assumptions. Due diligence processes became more rigorous. The bar for investment decisions shifted slightly higher. More importantly, other women and minorities in finance began reaching out to her. Junior analysts seeking mentorship, MBA students looking for career advice, entrepreneurs who'd been struggling to get meetings with investors. Taryn found herself becoming the kind of role model she'd wished she'd had when she was serving coffee and wondering if she'd ever get a chance to use her education. The transformation was perhaps most visible during Meridian's annual investor conference, held at the Four Seasons with LPs, portfolio company CEOs, and industry leaders from across the Midwest. Taryn was scheduled to moderate a panel on identifying red flags in early-stage investments, a topic that had become her unofficial specialty. The panel included CEOs from 3 of Meridian's most successful portfolio companies, all of whom credited Taryn's analysis with helping them avoid strategic mistakes during their growth phases. As she introduced the speakers and began asking questions about their experiences with due diligence, she noticed the audience's attention in a way that felt different from her early days at the firm. People were taking notes. Phones were recording her questions. During the networking break, a steady stream of investors approached her with business cards and requests for follow-up conversations. Robert Ashford, the LP who'd asked about her moral courage 18 months earlier, made a point of congratulating her on the panel. "You've become quite a draw at these events," he mentioned. "I overheard 3 different fund managers asking David if you might be interested in joining their teams." "Are you worried I'm going to leave Meridian?" Taryn asked. Ashford smiled. "I'm more worried about what happens to our returns if you do." The comment was meant as a compliment, but it highlighted something Taryn had been thinking about increasingly. Her success at Meridian had opened doors she'd never imagined, but it had also created new pressures and expectations. She was no longer the unknown analyst who could spot problems others missed. She was becoming the analyst everyone expected to spot problems others missed. The weight of those expectations became clear during Meridian's evaluation of CloudSync, an enterprise software company seeking $25 million in Series B funding. The company's metrics looked strong, their management team had solid experience, and their market opportunity seemed legitimate. After 2 weeks of analysis, Taryn couldn't identify any significant red flags. "Are you sure?" David asked during the investment committee meeting. "This feels almost too clean." Taryn reviewed her notes one more time. "I've looked at this from every angle I can think of. Their customer data checks out, their unit economics are solid, their competitive positioning makes sense." She paused. "Sometimes a good deal is just a good deal." The comment drew chuckles from around the table, but Taryn could sense skepticism. She'd built her reputation on identifying problems, And now everyone expected her to find issues even when they didn't exist. The pressure to maintain her track record of skepticism was becoming its own kind of trap. Meridian invested in CloudSync, and the company went on to achieve successful exits for all investors. But the experience taught Taryn something important about the difference between being contrarian and being right. Her value wasn't in finding problems everywhere. It was in asking the right questions and following the data wherever it led. 2 years after leaving the coffee shop, Taryn was promoted to principal at Meridian Capital. The promotion came with a $200,000 salary, significant equity upside, and the kind of professional recognition she'd dreamed about during those early morning shifts at the grind. But the most meaningful recognition came in an unexpected form. She was leaving the office late one evening when she noticed someone waiting by the elevator, a young Latina woman in business casual attire, clutching a resume and looking nervous. "Excuse me," the woman said, "are you Taryn Williams? I'm Sophia Martinez. I'm starting the MBA program at Booth next month, and I've been following your career. I was wondering if you might have a few minutes to talk about breaking into venture capital." Taryn looked at Sophia, 24, maybe 25, with the same combination of intelligence and uncertainty she remembered from her own early job searches. "Are you free for coffee?" "I know a place." They walked to the cafe where Taryn met with Keisha, who had since been promoted to shift supervisor while finishing her accounting degree. Keisha brought over 2 cappuccinos and joined the conversation when the evening rushed slow.